Hello, welcome to another live stream and another episode of Daily Market Mastery with me, Christian Rauchenwald. As always, let's get the disclaimer out of the way real quick before we jump into it and start looking at the charts and trying to make our plan for the current week. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. That said, all the things that I'm using, so the charting software I'm using, the broker I'm using, the strategy I'm using, and so on, everything is linked down in the description down below if you want to check it out. And I really recommend that you check out the Elliott Wave Principle, which is a book that you can read online for free if you follow the link in the description down below. That said, let's actually jump into it. So here's my screen. We'll start with GameStop. Not much changed. So on Friday, we finished a little bit lower than expected. I actually thought we might still see the push to 30 on Friday. From the looks of it, we have 5 waves up here. So 1, 2, 3, 4, 5 with a shorter 5th wave that, however, still reaches the profit target. And from here, we have, probably if we zoom in, we might already get to see it. So we have our ABC down. Now, it's possible that this here is basically a corrective wave, and we are here in the next wave. So we would have wave 1, 2, or 2 somewhere here, and then 3, 4, 5, and then ABC here, and from we bounce on the 50% retracement, and from here already develop our next 1, 2, and now next would be basically wave 3, wave 4, wave 5. That's one option. The other option is that this is just wave A, B, and we still get wave C. So there is the option that we also before we start to go up further, go down a little bit more into the area of potentially 26, 90, 89, 98, 89, and then from there continue our journey up. At least that's my opinion about how it's going to develop. Now, as for my options that I had last week, I had a couple of $30 put options. As a result, because we finished below 30, I now got 400 shares of GameStop. My average, however, since I received $2,400 or $600 per option in premium, is around the $24 mark. So as long as we stay above $24 with those specific shares and not considering the premiums that I earned before last week already, those shares are in quotes technically in profit. However, the big question is what to do now. Now, on one hand, I expect the stock, as I mentioned, to go up further. The next stop would potentially be around the $41 to $43 mark. So if that is indeed our wave 1, 2, then that would be the next stop. Or if that is wave 1, wave 2 is not that relevant to that whole thing. That would be the next potential target area for a third wave move. And on a bigger scale, based on this pattern, the next move would then be 57 to 63. The big question now is, do I believe that we are going to see those price levels this week or not? Because obviously I'd like to earn some additional money through options, or in that case by writing call options. At the same time also make some additional money by writing at least 1 or 2 put options. Now the situation here, however, is the following. If right now we don't see the premiums, they will show up in 11 minutes once the market opens, but we have around $300 premium around the current market price. So since I got those shares at the $30 mark, I could now say, okay, I sell a $30 call option, which would mean if we finish the week above 30, I just get rid of the shares. I mean, get rid in quotes, if I believe, or since I believe the shares will increase in value, that would be potentially dumb move. But then I would basically give the shares away for the same price I theoretically paid for them. Now, if I consider that I received $600 premium for each of those options, I could theoretically sell the $24 call option, which gives me way more money because it's already in the money for option premium, but it also would mean that I basically give back the $2,400 that I received in total last week for those options, which is also a dumb idea. Now, if I, however, believe that we will go, let's say, to the $40 mark, I could go ahead and sell the $40 call option, and we're going to go to option strat for that, because there we can still see the at least the prices of yesterday. Now wrong window, there we go, there. Option strat. So if we say, okay, I want to sell a covered call for GameStop for this Friday. So I said, if I were to sell a $30 covered call, I would receive $300 premium. So a total of $1,200 for the 400 shares that I'm holding. But again, I consider this a dumb move because I expect the stock to go up further. And in this way, I would just pocket 1,200 but miss out on any profit. Now, if I were to sell the $40 call option right now, I would only receive $150 premium because we're still trading at 30, which is also then a dumb move. Well, on one hand, if we finish the week above 40, my shares get called away at 40, which means I make a little bit more than 30% return on the 400 shares. Plus, on top of that, in this case, then $600 premium. However, it would make more sense in that case to wait and wait for the price to go up, and then and then at this point, basically, so if we bounce from the $43 mark, for example, sell a $45 or $40 put option, because if I expect it to bounce from here in a wave 4 and then go up in a wave 5, I would get obviously the most money if I sell the option when it's, in quotes, less likely to happen. So if we're already at 43 and I sell a $40 call option, it would be similar as if I would right now it says 28. So if I right now would sell the 27 call option, you can see I could potentially get almost $400 per option. So that would be $1,600 almost in total for the 4 options that I can write. And if I then expect the price to drop below, so we go up here and then we go from here down again, it would mean the option is out of the money, which means I don't lose the shares, but I still pocket the $1,600. The same issue happens the other way. So right now, I said, if we zoom in, I expect things to either we go up from here. If we go below 2803, that would be a sign that this is going to be a bigger ABC. And if we go below, what do we have here? Below 2741, that would be a sign that this is a bigger ABC. As I mentioned before, either we already finished here with the corrective pattern and have the next 1, 2, 3, 4, 5 in development, or the corrective pattern isn't finished, and in that case, we probably go down into this area here around 2650 to 27. Now, as I mentioned, I also would like to write, so sell another put option or 2. And I have the same issue here. We're going to just open a new tab for that. Cash secured put. Yeah, for GameStop. So right now I could, for example, sell a $30 put option. I have around $5,000 in excess liquidity available. So that's not, I mean, it might work for 2 as well, but that would not be the safe play. So I could sell it right now and get $400 premium. However, I could, with the $5,000, also sell 2 $25 put options, which also would mean the stock would need to finish the week below 25, which I consider very unlikely. Again, just my opinion, not financial advice. And in that case, however, I would only get $100, in that case times 2 in premium. Now, if the pattern plays out like this, that from here we actually still get a push down, it would make sense to wait for that to happen, because at that point, selling the $25 put option would be similar to right now selling the $30 or $29 put option. And you can see that it's 3 times the premium. So potentially, if we get another push down, I might be able to sell 2 $25 put options for $600, maybe $800 total. Then if my analysis is correct and we have our wave down here and then from there go up, obviously have them expire worthless by the end of the week and just pocket that premium, which is not a bad premium. Yeah? So that's kind of like the in quotes ugly spot right now, because the big question is obviously when will it happen? Now I already created some orders, so I have the $40 call option written right now, and for $500 each. So for that, the price would have to, GameStop has to move up into the 40 area or even slightly above 40 for it to potentially reach that price and fill those call options, which again would already mean if we stay above 40, I still make 30-something% return on the shares. and on top of that pocket $2,000 premium. If we then bounce from the 40, I either can buy those options back and for a profit if I believe that we have our wave 3 to the $40 mark. So I have to zoom out again. So we have our wave 3 to the $40 mark here, for example, then our wave 4. And then at the point where I think wave 4 is finished, I could buy those options back to realize the profit, because the wave 5 push then might take it higher than that. And yeah, and on the other hand, I also already have an order placed for selling the $25 put options, also for $500 each. Although for that, we probably would have to go lower. So we're going to wait for the market to open in 4 minutes. And then we're going to look at how the current pricing is, depending on the current volatility. And according to that, then adjust the order for this. So I also will have to keep an eye on if we start to move up from here. Pretty much if we go above 30.66, then we likely will not see the downward push. And I will be better off to just sell one $30 put option. Although I will get a little bit less than I would get at the current price. But still, I'm only able to sell one of those instead of 2 of the 25 ones. So there's that as well. Or if we open and we can see the development 1, 2, and then a push down 3, 4, 5 to get down into, not that far. Yeah. So, but A, B, C. Yeah. So like would have to zoom in even further for that. Yeah. So, or we see that this development here will become a 1, 2, 3, 4, 5 to finish somewhere here in that area where we can then get, or where I can then get more money for the same put options. Yeah. Yeah, it's in theory, it's super easy to sell cash secured puts and covered calls once you have the shares. But the big question is obviously always like, how do you get the most out of it? Yeah, for example, selling a $30 like selling a $33 call option or a $30 call option would have been great here in that area when we're actually above 33 or above 30 already, and then you have the drop happening, and with that, you just pocket the premium. But for that, you have to consider the time component, and the time is the hardest thing to estimate. So while it's possible with some accuracy to use Elliott Wave Theory to predict where markets and some individual stocks are potentially moving, so to have a better than just 50-50 hit rate, it's way harder to estimate the time frame that it's taking or that it takes to actually accomplish that. But we still have 2 minutes left. I'm going to use the time to lower my desk, and then we're going to see the pricing, adjust the orders, and look at a few other things. I'm just going to mute the mic for a second so you don't go deaf by the noise the desk makes. So yeah. We can also use the magic 8-ball that I got, thanks to the inspiration from Keith Gill. I think it's really a great idea, and we can just ask it, will GameStop, what would we want it to see? I mean, we want it to go up, but if it short term goes down a little bit, it just means we get more money. So will GameStop fall down to 26 today? It is decidedly so. So yeah, so the 8-ball says we will see the pattern play out like this. So that will be wave A, wave B, and our wave C will take us down here to 26. So that would work in terms of expansion levels and so on. Curious to see how it plays out. So 1 more minute to go to market open. And then we see. Now, in the meantime, while we wait that last minute, I also closed my remaining UBS put options also for a profit. So last week I closed 6 out of 10, roughly here. And I pointed out that this can either be 1, 2, 3, 4, and we get wave 5, or this could be A, B, C. Now, considering that we bounce exactly or very close to the 50% retracement, but more importantly, or additionally, we also have here wave A, wave B, and wave C bounces exactly at the 160.8 expansion. This points more likely to an ABC than to a 1, 2, 3, 4, 5. However, even if this turns out as 4 and 5, the problem is that wave 4 would need to develop as an ABC. And as a result, we would need, or my options expire on the 21st, so at the end of the week, and the chances are that the pattern will be further up at that time. So I would have to roll the options, which means I could better wait for it to go a little bit higher up and then sell new options. Now for that, what we can consider is that we don't need any more, but I can put, for example, a retracement here. And we would then, for example, at 2780, and wave 4 question mark. So 2780 would be the point where we could look into. That could be an ABC pattern, bounce exactly at the 61.8 retracement, and we could then here buy a new put option for the downward momentum. Although not right now, okay, that put option is right now in the money, so it would be more expensive. So if we wait for it to go up, we would get the 28 put option cheaper and also the 27 option cheaper. So yeah, that's what we're gonna do. Now GameStop is open and we start the movement with a push up. Now from the pattern, as I said, this is either 1 ABC, 1, 2, 3, 4, 5. ABC or not finished yet, so we could go as low as, what do we have here, 2803 before that becomes invalid. So we're gonna see in a moment, in quotes, like which way we go. So if that will actually be, or if we already have our corrective wave finished here, and that is the next 1, 2, and then 1, 2, and then 3, 4, 5, and so on. Yeah, can also throw an extension here. I know it gets a little cluttered, but if that were to be the next 1, 2, then we would expect the movement that happens next to take us up at least to the $31 mark or to the 33.80 to 34.51. And that's actually the only crucial part, because if we start to go up here, it means that I will not be able to sell the $25 put options for that money. We also will have to adjust the price that we want to sell them for. We can see that, for example, we get around $300 for in the money options. So and $500 would already be like, what's the current rate? Almost 29. So 30, 31, 32. So $3 below. So we would need to fall to around $22 per share, which I don't expect, to get $500 for the $25 put option, which is more realistic. So since we expect it to go down to 26, would be that we get at most $200 per put option, yeah, which is still there is then the question, if we try to sell two $25 put options for potentially $200 each, so $400 total, or if we just try to sell the $30 put option for $500. So I think that makes more sense. So if we, no, I canceled the right order, yeah. So canceled, yep. So we would go for the $30 put option, sell one, and we would sell it for 500, because the chance, if we have the downwards movement happening, I mean, right now it looks like it's not, but if we have the downwards movement happening, then if we reach 25, that would be the same as here, 35. So actually more. So we could actually go for $700, and then one option would actually bring us more than, yeah, 7 or 800 possible, 750. Yeah, let's settle for 7.5. So this way, if we in fact, didn't want to open my password manager. There we go. So if we in fact were to still see with C, which is what the 8-ball says might be the case, then we would, as said, potentially be able to get the $700 for the $30 put option. Now, once we cross higher than 29.37 here, it becomes highly unlikely that that's the case, and then it's more likely that this is wave 1, 2, or 2, and that's the next wave 1, 2, and we actually are in wave 3. As long as we stay below this point here, this could still be from an downwards movement, wave 1, 2, so there is an ABC in some form in there. So yeah, it remains to be seen how that plays out. The bigger issue, however, are right now the call options, because as said, the premium, if I would sell them as $30 call options, I would get $282. So let's say round up for now for the math for $300. So less than $1,200 total. And would have no additional profit if we go higher. Whereas if I already sell the $40 put options now, it would only bring around $500 total, which still isn't bad. Yeah, I mean, it's still a like 3% return, extra return for 4 days till Friday. But it's not as much as I think will be possible. On the other hand, if we first go down, which is what the 8-ball expects in quotes, then the prices for those call options also plummet, and we'll have to wait for the movement to go further up to then get a better price again for our call options. Yeah. The important part, however, or the important point, however, is that our average for the call option for the shares is set at 24. So any movement, as long as our overall patterns stay valid, any movement there still keeps us at a profit, considering the premium we earned last week. But then from there, moving forward, we'll have to, or if we were to go below that point here at 24.80, then we would have, like to consider how to best play that, because then the pattern becomes, this part of the pattern then becomes invalid. Other than that, do we have anything else to cover right now? All our other shares are just moving in whichever way, not super relevant. We still have the bull call. That's going to be interesting. It's also expiring this week, so we can look at that. So safe trades. So it's basically a bet that GameStop will be above 45. We'll see how that turns out. So it cost me $70. If we make it to 60 by the end of the week, which I don't consider impossible, it actually pays out like 20 times the debit that I paid. So in the meantime, however, so right now, for example, the curve looks a little bit different. We would have to go at least above 32 for it to be in profit. Considering the small price, I'll likely, unless something surprising happens, keep that option till expiration. Either I'm right or I'm wrong. The debit paid is really, so the risk reward ratio is really great with 1 to 20. So I can be wrong here as well. If we move downwards or so, I wonder what's the current price of that. So it's currently at a small loss. So it's currently $25 cheaper. So right now that same play would cost $50. I wonder, I mean, I would need some indicator that the pattern plays out the way I think, then I would potentially be willing to get a few more of those bull call options. So that they basically function by buying one call option and selling a higher one. So you have a limited area in which you make profit, and then your profit is capped, but you also reduce your expenses because you don't have to pay a loan for your call option. So for example, if you would get the $35 call option, it would cost you $187. Whereas if you then sell the 40 call option, you get 130 something back. So effectively, it costs you $50. And the profile for the trade, where's the profile button in the center, then looks like this. That basically you lose your premium, the 57, if you stay below 35. And you gain 400, so almost 10 times, in that case 9 times your risk. If we finish the week above, pretty much 36, 35, 57 is where it starts to get into the money, and then at around, or even a little bit higher. So we have to reach 40 then to actually maximize the profit of $400. So other than that, not much we can do. GameStop had its shareholder meeting, I guess, today before market open. I had no time. I was busy with other things to attend it. I saw some posts. We can actually check Reddit real quick. So, but now come here and here, and there you go. If there is something worth looking at, that's the funny thing. So that ComputerShare pointed out for people that are on Robinhood that they should join as guests, which is kind of like a wink about them not really having shares. Really a slap in the face. So hopefully some people use that slap in the face to actually follow through and switch to a proper broker or ComputerShare. The ComputerShare number works. This we already knew that last time. And do we have any? Let's go into here and here. And let's check by new. GameStop rises start the week. Did it? I mean, yeah, a little, but still not out of the woods. How does that look if we look really close? Still possible for that to be 1, 2, 3, 4, and we get 5, or for that to be ABC. So like 5-minute chart also doesn't help much. I do, however, I consider, so like while there is the option that we go down and we'll be able to sell better put options, I think it's more likely that this is actually already 1, 2, and here we have the next 1, 2, 3, 4, 5, and making that 1, 2, and there 1, 2, 3, 4, 5, and then we get a wave 2, and then we get a wave 3, and then we should actually start to see the upwards movement. So I think that's the most likely scenario. We'll have to wait and see. It's my so, and what else do we have? Oh, there I need the other screen. So, both these. Okay. Okay. And here. Same thing. Okay. Yeah, it doesn't look like there's anything worth looking at, to be honest, on Reddit right now for the time. So chart gazing it is, yeah. So not much we can do other than just wait and see how it develops. And question is, I don't need the strategy builder. Question is, what's the smart play here in terms of getting the most premium? Yeah, that's the big question here. So I think we could get more for the $30 put, but it would have to go down. On the other hand, anything, so even $300 would equal a 10% return before taxes. So we have a $3,000 capital commitment in case the stock stays below 30, where on the other hand, we get $300 premium, which means the shares would actually be with an average of 27 if we have to buy them. And we would get, as said, like 367 or so in premium, or maybe 370 right now. 370 pretty exactly, yeah. And yeah, like there really is the question. As the price moves up, those become cheaper, so we get less money for them. And as the price moves down, they become more expensive. Now that here makes it look more like ABC, considering how far we went down here already. It doesn't have to be. It's still, so only if we go under this point here at 28.35 would that become ABC, and we actually would expect to go a little further down, which would be in our, in quotes, favor as far as options go, since it would drive up the price of the $25 put options, or at least increase it. Question is, will we get to see it like this? Then this would be theoretically 1, 2, and then we get wave 3, 4, and wave 5, and then pretty much are in our 26 target area here. So maybe it plays out like this. Yeah, so how is the volume doing today? So I mean, that's an opening. No, opening was earlier. Opening was, okay, that's an opening, yeah. So 3.2 million. And almost nothing. Okay, it's just the first minute, so we'll see. Yeah. Actually would have a few other things to do as well, but yeah, gonna stay online for now, simply to adjust my options or keep my options open, while we're waiting to see how this all plays out. On one hand, we have 29.18 as the upper boundary. If we go above that, then that's definitely 1, 2, 3, 4, 5. On the other hand, we have the, what was it here, 28.35 as the lower boundary. If we go below that, then it definitely is ABC, and we get to see here 1, 2, 3, 4, 5. Yeah, like, but the minute chart is obviously too cluttered in quotes, so we'll wait and see how that develops on the 15-minute chart. And then take it from there, yeah. Let's ask the 8-ball again. Are you sure that GameStop will go to 26 today? Okay, unclear. No. Are you sure that GameStop will go to 26 today? It is certain, yeah. I mean, it's second time that the 8-ball confirms that we go to 26, so we should probably just believe it. That would make, yeah, then that would need to be a big 1, 2, 3, 4, 5. Yeah, so, or yeah, for that, if we go below 27.41, then this cannot be ABC, but this would be A, B, C. Yeah, so let's see. On the other hand, the set on the upside, we'll also relatively quickly see how it plays out. Up to stay here. Would be nice to get the like 700 premium for the $30 put option. But as said, not sure. The only other way would be to play it further. So you see the premiums go up. So if I say, okay, for example, till June 19th, we get more money, but it also means for a longer time. So in this case, it would be a 20% return for 4 weeks, or a little bit more than 20% return for 4 weeks, or actually 4.5 weeks. Whereas for the options that expire this Friday, we'd have a 10% return, but for 4 days. Yeah. So that's the, here we were, okay. Well, looks like we'll get the upward movement here, yeah. So looks like the 8-ball is or was long, and that will then most likely be ABC, 1, 2, 3, 4, 5. As I mentioned earlier, ABC, and here we have the next 1, 2, 3, 4, 5 to probably around here somewhere, and then next corrective wave a little down, and then next push up, and then we should actually go up from here. Now that, yeah, I mean, still have to wait for some kind of confirmation, but from the looks of the movement here, it's what would make more sense. In this case, we already finished the corrective wave A, B, C down here in some way, or A down here, B, C, and are as said in the next 1, 2, 3, 4, 5 movement upwards. So, yeah. Okay, yeah. Do this, do this. Mhm. Yeah, I know it's not super exciting, but chart watching is part of the game. So just waiting for things to move into a certain area to either confirm or break a pattern. So we can then be clearer on what's the valid pattern. Yeah. Curious how long it will take for us to break out from that area here to have a better indication of which way we're going to go. Yeah, that probably might still take a bit. Even on the 1 minute chart, still both would be possible. A, B, C, and we go down, or 1, 2, 3, 4, and 5 comes up. So not much to do, but wait. Wondering if there's another play here worth doing, so that would work out. So theoretically, I could sell the $40 put option, but that brings the problem with it. If we stay below 40, I actually have to buy at 40 and we'll have an average of 28. Considering the premium, although the premium would be hefty. So, and I have to consider that, for that we'll have to zoom out again, that even if I'm right here and we make it up into the 40 range or so, so for that we would have to zoom out a little further. So that even if I'm right and we make it, for example, into this range here, then after that we should get a fourth wave that again brings us down, which means selling the $40 put option then risks that by the end of the week we would be here again, and as a result that then the options would get assigned, which might not be bad to get more shares, but it limits us because then the funds are tied in the shares, which means we can only sell covered calls, and which limits us a little bit into how much option premium we can earn. Whereas, yeah, so the only other alternative other than selling something like that, where we would need to get more premium as well, because like we would have basically here, we would have $4,000 capital commitment, and yeah, would make, I mean, a 30% return on that, yeah, but only if we finish the week above 40. So it would bring up our average, and that we definitely don't want to have to happen. So 30 is kind of like the top of the game, or the top of the range. Again, misclicked up. So yeah, like will we go below 28.51? That would be a little bit of confirmation that potentially we are on the downwards track, at least short term. There we go. Yeah, like I mean, obviously I should be unhappy about any downwards development, but now it's still possible that this is ABC, and somehow we have 5 waves up here or whatnot, but it's now more likely, in my opinion, that this is ABC, and this here will be 1, 2, 3, 4, 5, and will go down further, which means I'll get to sell either higher priced $30 put options, or let's actually reconsider that. So I can either sell the $30 put option for 750, which brings my average to 2250 if we finish below 30. So for those 100 shares, or I could potentially sell those here, but I would need to sell them for almost 400. And in order to sell them for 400, we would need to go down to 22 or so. So although yeah, I think selling only one is the better play here. So if we get to see that, so yeah, there we get the push, which makes it more likely that that whole thing here is either a bigger ABC, in which case we can throw in expansion there. So that would be our point A, starting point 0, and that would be our point B. And then we would expect to go down to this level or this level at least. In worst case, the 26 mark. But I think for that movement here, if that were ABC, that would be the maximum anyway. So because if we go below here, it could not be ABC. It would need to be A, B, and then here 1, 2, 3, 4, 5. And there I'm just going to move that expansion so to get a better idea again. So if that's the case here, then we can see that we would have our 100% target in the 26 area, which also would be the 61.8 retracement of the entire 5 waves that we had up here. So I think that's the likely scenario. But as I said, we'll have to wait and see if and how it plays out. In the meantime, I'm actually going to, on my other screen, quickly download the tax reports that eToro says were finished. For those of you that aren't aware, I used to trade more on eToro. Got a little bit gambly there with 20 times leverage at some point, and eventually then just cashed out there and moved to, was sent to, I disabled the push notifications there for the eToro app. Obviously, I have to enable them again. Can I try via text message? Yeah, just send me a code. There. So that's the tax report 2023. Okay, and then we can log out. I can log in with my other account. And get the settings account, tax reports 2023, and get that. Okay, so get those. Yeah. Okay, and on the side, I can also deal with something else. Yeah, I'm gonna stay online for now, so until we have some confirmation. But don't expect too much from my side or my end for now, because as I said, I'll work on a few other things while I keep an eye on the chart here. Where is the, oh God, I hate the platform. God, yeah. Dealing with a freelancer platform, and it's just a pain in the ass. Like, some of them are just so, I don't know, like, so hired a freelancer, he ignored the instructions completely, worked on stuff that wasn't asked for part of the briefing, did the stuff that was asked for in a completely different way that doesn't work. So we leave a fair but honest review that he ignored instructions and worked on stuff that we didn't ask for. And then the platform goes ahead and removes our review from his profile, but allows him to leave a bad review on ours, while at the same time refusing to refund the payment. Yeah, so it's like beyond me. Yeah. And then I have to spend my time providing evidence in the form of chat histories and whatnot to get the false review removed. I mean, the money is anyway gone, blah, blah, blah. And it's like, it just baffles me. It takes away so much credibility. It used to be, so the freelancer platform in question, by the way, is Upwork. And it used to be that the only way for a freelancer to get rid of a review is if he refunds the entire money. Yeah, so if you, I mean, they can obviously also get reviews removed or feedback removed if they point out, or if they can prove that it's wrong. So like maybe they deliver what you asked for, but then you leave them a bad review because you want them to issue a refund. Yeah. And then they provide some evidence that you actually wrote, great, everything's working, thank you so much, or so. Yeah. Then they can get the negative review or feedback removed. Other than that, from what I recall, it used to be that it's like, okay, if you want to get rid of the review, then you refund the payment. And with that, it's like the contract never happened. It's still wasted time for the client, because like you hired somebody to do something, you spend time briefing them, looking at what they're doing and providing them with feedback, just to then abort the project because they cannot deliver what they first promised they could. But it's, on the other hand, still better than having the money lost as well. Yeah. Now, apparently that changed so that certain freelancers can, whatever, once per quarter, just have a review removed from their profile. And the funny thing in that case is, however, they still can leave you as a client a bad review, which makes it harder for you to hire other talent and whatnot. Yeah. And that review doesn't get removed and you don't get your money back. Yeah. And it's like, yeah, it's like been really a frustrating experience. But there are not many alternatives out there. So the only option is to bluff and say, okay, either this and that happens, or I'm going to shut down the Upwork profiles for our free legal entities. And that usually gets things moving to at least get negative reviews removed from our end as well, because it just doesn't seem fair if I hire somebody, they don't do the work, and I went through great lengths to leave a review that is not insulting, but that simply states the fact that for us it didn't work out because he didn't follow the instructions and so on, and the solutions that he proposed actually don't work. But it might be in our based on our specific requirements and whatnot. So I'm really, then when I leave a negative review, I really try to leave it in a way that still makes it clear, okay, for us it didn't work out, but you can give it a try. Yeah. So and then having that removed, and on the other hand, just have an insulting review on your own profile left, just because the freelancer has some average good ratings, which he maintains by removing reviews that are not good. Yeah, it's just ridiculous. Yeah. Yeah, but that's the way. So now I'm dealing with the Upwork support with two different teams there to get that review removed. Maybe that I even filed the refund request for the first week of work and provided evidence back then that the work wasn't done and so on. And I got an astonishing 1 hour of the total time refunded. And now that I'm making a fuss about the feedback, they're actually, yeah, it's like outside of our refund period and blah, blah, blah and whatnot. Yeah, I mean, if your team would have bothered to do the proper work back then, I would have gotten at least 1 week of my money back or so. But yeah, anyway, that's that. Now, I still have a few other things to take care of. I actually thought, to be honest, that we will have a little bit more movement already during that time, but it doesn't look like it. Check when's that. Okay, 4 hours. Okay, so doesn't look like it. And then on the other hand, yeah, I feel, or I think like that, as said, the more likely development will be, as said, the movement down here. Maybe not all the way down here, but somewhere we would have confirmation, as mentioned, if we go below 2803. Oh, that's the wrong thing. And on the other hand, okay, that's, yeah, there we have an alert for that. That's fine. And yeah, there's not much point, I guess, to wait around. Yeah, I think we'll call it a day. So I'll keep an eye on the chart, and then depending on if we go above here, which would force me to adjust my plan for the options, I think it's more likely, and the 8 ball agreed twice as well, that we will go down to 26. If we go down to 26 here, I should be able, as said, to sell the $25 put options for around $30 put option for around $750, because I expect that after that move we would have this ABC finished, and then from there make our way back up. So which means by the end of the week that option should be out of the money. I just pocket the premium and I'm happy about it. And even if it would trigger, we would get shares with an average of 22.50, which is also okay. And on the other hand, yeah, I mean, the call option side is a little trickier, because I said, like, selling the $30 call, for example, right now, I get $800 for 4 days. Yeah, I mean, it's also not bad. But if we then go higher, I give the shares away with no profit on the shares, so at least on those shares. Whereas if I go for a higher for the $40 call option, I get $400 for 4 days. Yeah. But that's like 3%, 3 point something percent return, which is also not bad. But on the other hand, if we actually go to 40 and then have the bounce that I expect, I end up in quotes with more. So in premium, plus if we then still stay above 40, I have not only the bigger premium, but also the 30% return, or from the 30 where we got the shares to the 40 where we'll give them up. So kind of like tough choice here. And now we start to move down a little bit, but I said, like, I think, I mean, the minimum target would be here at 28. That would be the minimum target for, if that's A, B, C. However, that would not fulfill all the rules and guidelines, because we would need to go below point A, and the only target we have there is the 26.76 mark combined with the 61.8 retracement. So yeah, the question is how it will turn out. So if that will be 1, 2, and then 3, 4, and 5, yeah, we'll see. Either way, gonna go offline for today. There will be a stream tomorrow. We will see which of the 2 possible scenarios happen. Right now, the downwards one is the more likely, at least short term. So maybe we finish the day in red at 26 or so. And then still the question would be, last check, at 26, I could also sell 225 options, but it's kind of like the same thing, yeah, or it's not the same thing, because like here I only have 2,250 capital commitment if I consider the premium, whereas if I sell the 25 put option then for around $300, I have 4,400 capital commitment for the same or even less in that premium. So I think we're gonna stick with the 130 put option and try to sell it for this price. If the price drops as I think it will, into the 26 area, so slightly above 26, and yeah, then we'll see. Hopefully the premium goes high enough when we reach that point, or if we reach that point. But yeah, that's, I think, how it will play out. So if we zoom out again to see the bigger picture, we would have on one hand we have 1, 2, 3, 4, 5 here, then we have a corrective wave down here, my assumption, or based on my assumption, that we have 5 waves here, and now we are correcting down here, and then from here we actually get then potentially a stronger wave up. So I would not be surprised if we finish the week in the area around 40. Around that area here, it's where I would most likely expect another small bounce down, and therefore selling a $30 put option seems to be the best way to go here. Anyway, that's it for today. Don't forget, like, subscribe, enable notifications so you get notified via email and on YouTube when we're live, or when I'm live tomorrow, since those streams are not exactly scheduled, but always vary a little bit in time around market open. And yeah, last thing to mention, today, Wednesday, is a holiday or trading holiday, so there's not going to be, there's not going to be a stream on Wednesday. And other than that, yeah, see you tomorrow. Thanks for tuning in. Till then.